Most traders measure their development through one thing, whether they are making money. But profitability alone doesn't tell you what stage you're at. A complete beginner can make money through luck. A developing trader can lose money while becoming significantly better. And someone can follow every rule correctly while trading a system that simply has no edge. The problem is that when traders don't understand their current stage, they start fixing the wrong thing. They change strategy when their real problem is execution. They work on psychology when their rules are still vague, or they assume their system works before they have collected enough data. In this video, I want to break down the 6 stages of trader development, help you identify where you currently are, and explain what you actually need to overcome to reach the next one, because you may tackle the wrong problem, same as I was. And then at the end of the video, I'll show you exactly what stage of development I'm at based on all my reviews and my current development. And so without further ado, let's jump right into it. All right, stage 1. Stage 1 is called the Reactive Trader, and you've most likely been here. This is when you actually start trading. You chase basically every move of the market. You see the market going up, you're going out. You see the market going down, you're going down as well, right? You don't really understand what trading is about. You are trading emotionally and measure yourself through every win or loss. This is the most basic stage. This is where people who start trading are at. They don't really understand what trading is about. Their problem is not strategy optimization. The problem is survival and emotional impulsiveness, right? This is just a very basic stage to be at, although it's not bad in a way of, you know, this is where you lose money. That's obviously the case, but this stage is also very beneficial, because without this stage, you cannot make it to the next stage, right? So this is the, you know, this is the introduction to trading. This is basically the most fundamental stage that you need to go through, because without this, you just assume that trading is, you know, just up and down, and you're just being reactive to the market. So what's actually required to go to the next stage is a very, very good knowledge about control risk, and really stop treating every individual trade as personal verdict, right? This is crucial for stage 1. This is where most people get really discouraged, because, you know, every single outcome of that stage feels like a personal verdict, whether, you know what, I'm good at it or I'm not good at it, I'm gonna make it or I'm not gonna make it. So this stage 1 is actually crucial. Now, stage 2 is called the strategy searcher. And this is where people learn technical analysis, indicators, liquidity, and market structure, but constantly move between ideas. And you've been here. You probably research support and resistance, and then you understood that, hey, listen, maybe that's not going to work, because you took one trade and then you end up losing, or you took 2 trades and then you end up losing. So you then assume that, hey, maybe this is not going to work for me. And then maybe you do some Fibonacci, and then you do some RSI, or, you know, you just keep switching between strategies and indicators, and you think that the more indicators you have is going to solve your problem. And in a way, this stage, people who are at this stage, they believe that this concept will create certainty, although that's not really the case. What's really required to pass this stage is to choose one market and one repeatable trading idea. And then it comes stage 3, which is the system builder. And this is where people really start defining their entries, right? Stops, targets, and risk. However, in this stage, their rules remain negotiable. They follow the system when comfortable and change it when afraid. So you've probably been here. I have certainly been here. Whenever the system was the system that I designed was delivering some profits, I felt so confident in it. I was like, oh, this is it. I finally got it. And then the moment I started losing, I thought that, maybe this is not the system that I really wanted. Maybe the system has a lot of flaws. How about, just implementing some other rules? How about just changing it again? How about just tweaking here and there? But that's not really what's required stage 3. What's really required from stage 3 to stage 4 is to create an exact playbook and execute it constantly enough to produce trustworthy data. Because 2 trades, if you judge the system based on 2 trades, 4 trades, 5 trades, that's never going to work. Even if you judge your system by 20 trades, I don't feel like that's enough data. Even 25, 30 trades, that's still nothing. I believe a good amount of data would be about 100 trades to actually tell if the system is profitable or not, right? So then it comes to stage 4, which is the controlled operator and validator. At this stage, the trader can follow a defined process, control risk, and distinguish a valid loss from a mistake. But they still don't know whether the system has a genuine edge. So this is exactly what I talked about. When it comes to the transition from stage 3 to stage 4, like instead of just changing the rules, tweaking the system, just adding another indicator, or just like having random ideas, you execute that system all over again until you know exactly what your process is about, right? You have the exact risk for the exact number of trades, and then you can distinguish what is a valid loss from a mistake. Because then at stage 4, it really clicks in, like, this is my system, this is what I need to gather data from. And moving forward, out of like maybe 50 trades that you collected data from, then you can actually make a judgment whether the system is profitable or not, right? And then it comes to stage 5. But what's required from stage 4 to stage 5 is interesting, because once you discover if the system has a valid edge, you then freeze the rules and collect clean forward data without interference, right? So stage 5 is the validated profitable operator, all right? And at this stage, the trader has accumulated credible evidence of positive expectancy after costs. And their results should remain positive across more than one small sample and through ordinary losing streaks. This stage is where you're basically being validated, or better said, where your system gets validated, because now you can test your system. You really have enough data to really test your system. And this is basically the profitability. This is where the profitability comes in. So let's say at stage 4, you've gone through 100 trades, and then out of these 100 trades, you end up having a 60-40 win rate. You win 60% of the time, you lose 40% of the time. And your risk to reward is also positive. So then at the end of all these trades, you end up having a positive expectancy, maybe a 0.3 risk to reward per trade, which is really good. That's a positive expectancy. And then you move to stage 5. And stage 5 says that all these rules are set into place and that the system can now deliver a consistent profit through a numerous amount of events. And then it comes to stage 6. Given that you can preserve the edge and continue validating your system and resist unnecessary optimization, then it comes to stage 6, which is the mature professional. And the trader has a proven edge and stable execution of stage 6. You executed the system enough times that now you understand drawdown, execution cost, market regimes, and cautious when scaling. You become really cautious about all these things because now you've executed the system, and so you know it has a very positive expectancy. And then there's no reason for you to change anything in the system, right? And then a mental shift happens, because at this stage, trading is treated as a sustainable business rather than a test of identity. Now you know that trading, or now you know that one loss isn't necessarily going to affect your self-esteem anymore, because you know how probabilities work, right? So this stage is where everybody should aspire to get to when it comes to trading. And the next requirement from this stage is actually very simple, and that is to maintain and adapt without destroying what already works. So these are the 6 stages of trader development and what everybody needs to go through when it comes to trading. And think of it as a map. And what I really want to stress here is that the map is not necessarily the territory, because, these stages can point to whatever you need to fix when it comes to your personal development. But these stages aren't perfectly linear, and this is huge for everybody to understand, because stress can temporarily push an experienced trader backwards, right? And even experienced traders can, just have moments when they just need to go back to, like, for example, stage 3. Like, you're the stage 6 mature professional, but then sometimes you're still facing issues from stage 3. So each one of these stages is not, think of it as like, once you go from stage 1 to stage 2, you may still have problems from stage 1 going to stage 2, or even if you get to stage 4, you may still have problems that are related to stage 1. So don't think of the process as, just like a linear sort of progress, because that's not going to be the case. What's really important to keep in mind here is that your overall development is therefore limited by your weakest important area, not by your greatest strength. And this is huge, because you may be very good at controlling your risk, right? You just have this risk management in place, and you may be very good when it comes to that, but then you may struggle with other things. You may struggle with trade management. Like, what do you do when you're actually inside a trade? So that's a different problem to tackle. So this is very important, and this has been very important for me as well, because I thought that, hey, I really have this trading system right now that I'm executing, and my risk control is actually great, but then why am I still not profitable? And that's because I had all these other issues related to the previous stages of development that just kept pushing me backwards. So keep that in mind, because that's also important. And then secondly, profitability does not necessarily reveal your stage. And this is another key element that I wanted to point out, because a reactive beginner can make money during a favorable period. A disciplined trader with a legitimate edge can lose money during a normal drawdown. This is very important to keep in mind. So therefore, one profitable month does not automatically make someone advanced, and one losing month does not automatically mean someone has made no progress. Because, we tend to really measure our development through the P&L and our progress overall as, how much money we can deliver, but that's not really the case. I think the most honest way to measure ourselves is by our ability to execute the system and to follow the rules. So the question is not simply, did I make money? The question is, what produced that result, and can I actually repeat it? So That's the important question and distinguish to keep in mind. And the third advice that I'm just going to give here is stage dependent. Telling a strategy searcher to trust their intuition could encourage random trading. Telling someone with a proven system to keep searching for more confirmation could destroy their execution. Telling every trader to let winners run is meaningless unless their data supports that management model. Good advice given at the wrong stage can become bad advice. So this is something that I've also been struggling with a lot because, I heard all this amazing advice, as in like, you need to let the winners run. You need to, you need to trust your intuition. And this is extraordinary advice when it comes to trading, although it's really important to apply this advice at the right stage of development when it comes to trading. And this is something that I couldn't really understand. I was like, okay, I'm just gonna let my this win run, and then it would end up being back at break even or even a loss from having great profits back to where it started. It was just painful, and I just couldn't understand, like, why is this the case, right? And so that's an extraordinary advice. Like, you should absolutely let your winners run, but that's only after you have proven your system works, right? And so you kind of implement that advice into your system, and then you need to test that advice according to your system. So this is huge. And then something that helps you progress through one stage can trap you inside the next one. And again, this is something that I really battled with, because curiosity helps you learn technical analysis, but later it can make you constantly modify the system. So that's just one example. And then discretion can help you understand price, but it can also become a loophole for breaking rules. And then confidence can overcome hesitation, but too much confidence can create oversizing. So again, when you hear about things such as just be confident that the system will work and so on and so forth, that can definitely overcome hesitation, but too much confidence can definitely be damaging when it comes to trading. Development isn't only about learning new things. It also requires recognizing when a previously useful behavior has completed its purpose. So you may need confidence at first, right? You need to be curious enough to actually understand the markets and to learn the technical analysis, but then if you're stuck with that sort of mentality, like, oh, I need to learn the next indicator and then I need to implement this and then I need to do that, this is totally going to damage what you've basically tried to achieve, because, it's just going to backfire. So I just wanted to point this out because we hear a lot of advice on, the internet and by reading books, but not every single piece of advice is tailor made for your situation. And while all advice is good, we actually need to distinguish what actually advice works for us and where we're at. So progress is only properly tested under pressure. And this is again a huge thing, because following your rules after a winner is relatively easy. The real evidence appears after three losses, maybe after being stopped before a reversal or after watching a move happen without you. So measuring your progress, it's crucial when it comes to trading, but then again, how do you actually measure the progress is essential. And if you haven't truly mastered the behavior because you perform it once while calm, well, that becomes part of your development when it survives discomfort repeatedly. It's just part of trading, and again, it just goes back to the same idea that I've been trying to emphasize, and that is to truly know the stage you're at and what advice works for that specific stage and how you can overcome that stage. So keep this map in mind, because this is something that truly helped me to overcome these stages and to get to the next stage and, just become better at trading overall, because I had a tendency to tweak the system a lot, to break my rules, because I thought that I was just being clever, and that truly ended up damaging my trading and my progress overall. So where exactly am I on this map? Well, I'm at the stage 4, where I am just validating my edge right now. Up to this stage, I had a system in place. I was truly reading the charts very well. I was reading the markets very well, but because I was breaking my rules constantly, and I'm not just saying like breaking my rules as in like I'm not executing my edge consistently. I was just breaking my rules in terms of like, do you know what? I'm just gonna move the stop loss a little bit here, because, I believe then I'm gonna get, I'm gonna keep myself afloat in the trade. So that's something that I was dealing with. And then maybe I would close my profits too early. And then, all these sort of things that it makes you feel like you've made it, and that now you have a better and bigger and whatever understanding, but it truly backfires on you. So that really belonged to stage 3. And then how I managed to move to stage 4 is by just like looking at my behavior and not just having random rules that I heard on the internet that could work, but just, having rules that actually work for me, and having rules that will actually help me correct my behavior, because I never struggled with risk management, right? So there was no point for me to investigate that area, but then I struggled with other things, right? And then right now I'm really taking an experiment of 30 trades, where I'm just gonna execute the plan without any interference from my part, so then I can collect data and actually tell if my edge is truly profitable or not. So I should have a positive expectancy by the end of this experiment. If I'm not gonna have that positive expectancy by the end of this experiment, then I may need to revise the system, the rules, whatever. But this is where I'm currently at, right? So I fixed, obviously, the way I was taking profits. I am now classifying the trades better. I'm defining the thesis. There's a lot of things that I had to change, which I'm probably gonna discuss with you in the future whenever I'm going to have the data at the end of this experiment, and then I'll probably tell you my rules, my strategy overall. So that's something that we can definitely discuss in the future. I'm trying to become a consistent operator more than anything, because I'm not yet a profitable trader, and this is really what this experiment is about. I will for sure know by the end of it where I can whether I'm profitable or not. And 30 trades is not enough. After the 30 trades, I'm planning to take another 20. If these 30 trades will prove out to be to have a positive expectancy, maybe I will increase the risk slightly. But then other than that, I'm not planning to change anything when it comes to my system and my rules overall. One thing that I also notice is that my psychology has advanced faster than my statistics, because now I feel more grounded. Now I feel like, I have something to ground myself into, and that's just because, I understood the importance of having the rules, and just making sure I am always executing the same strategy all over again. So this is something for you to think about. And You can write this down on a piece of paper if you want. These are 3 questions that will help you truly identify the stage that you're currently at. So the first question I have for you is, can I clearly define one repeatable setup? The second question is, can I execute it consistently enough for my records to be trustworthy? And then the third question is, does that clean record demonstrate positive expectancy after real costs? So if you answer the first question, as in like, yes, then, you are building something. But if you cannot really answer the first question, you are still searching or building. So you have to be really honest with you here, right? Depending on your answer on the second question, you may have a problem when it comes to execution. So again, you have to be really honest with yourself here, right? And then depending on your answer on the third question, you are still inside the validation. You are still looking for validation. And this is where I'm currently at, right? And if you answered all these 3 questions as yes, you can actually start thinking about preservation and scaling. So, let me know which stage you believe you're in and what evidence supports that answer, because this is important. You need to have evidence. When it comes to trading, it's not like second guessing or anything. There's evidence. There's a lot of data. And be honest with yourself. Answer these questions, and then you'll probably find out what stage of development you're at when it comes to trading. So this is it for now. I hope this video is going to be beneficial for you. This is important because, again, trading is such a personal journey that just following random advice from the internet can actually damage and backfire you. So this is why you need to know exactly at what stage of development you're at, so you know exactly what problems you're dealing with and what exactly you need to fix. Alright, this is it for now, and I'll see you soon.